Good afternoon, everyone. Today is February the 12th, 2016, Friday. My name is Christian. We're looking at a few different market charts today. Starting off with looking at oil and WTIC. You can see on this particular chart, we're looking at 6 months. Each one of these candles represent 1 day of trading activity. So on today's trading activity, you had a big move to the upside. However, I would not be a buyer here. Multiple reasons, but we'll start off with it's in an overall downtrend, right? Lower series of lows, lower series of highs. When the 50-period moving average is trading below the 200-period moving average, you know you're in a downtrend. You do not attempt to buy bottoms because it's like trying to catch a falling knife, and you'll be wrong more times than you're right. So having said that, I know some of you guys will probably still try to do it anyway, and that's your trade. That's up to you. Maybe some of you guys made this move here or here or here. It might be made on it if you can call it right, and I get why you would do that. However, on today's trading activity, all I saw was short covering ahead of a 3-day weekend. And probably a lot of people predicted that was going to happen, and so they took advantage of that trade. You had 6 consecutive days to the downside, 1, 2, 3, 4, 5, and 6. You'll notice that you even took out the low here. So all very, very bearish condition there, not something that you'd want to be looking at as a bullish sign here, some kind of a bottom. In fact, whenever we come up here to the 50-period moving average line here, we find resistance. We shy away from it. You can see all the selling that comes in here, and we start to sell off again. So that's something to keep in mind here. And in essence, if the market's being pulled and pushed by the price of oil here, it would look like oil is still got lower to go here. This is not a bottom signal here. We're taking out lows, and so that's something I look for to continue to move lower. Having said all of that, looking at the Dow Jones Industrial Average 6-month daily chart, you can see they had a nice little bounce going on here in the U.S. markets because of the price of oil, European markets as well. But again, I just consider this a dead cat bounce. There's nothing here that I want to be bullish on. I told you guys last week that this was going to break down. It hadn't on the Dow, but it had on several other markets, and that's exactly what happened this week. We saw more selling. That gave us 5 consecutive days to the downside. No market moves straight down or straight up. So even though you have multiple days to the downside and then you get an up day, it doesn't mean that it's over, right? You can still sell off all over again, and then you have more up days, and then sell off again. Have more up days. None of that matters. What matters to me is the overall direction of the trend, and in this case, we have a bearish trend. A 50-period moving average trading below the 200-period moving average, and whenever I'm looking at the Dow, I like to get confirmation by looking at the trend. So let's look at that right quick. All right, quick glance here at the Dow Jones Transportation Average Index. You can see the trend. This is a 6-month daily chart. We've already taken out the lows, even though the Dow is still trying to hold on to them. We took them out a while back and then broke much lower, and then we had a nice little rally. But like I pointed out in the other charts, this is a bull trap. It's going to break to the downside. And you'll notice that we got a sell signal 3 days ago, and we're moving closer to this 50-period moving average. That's where you'll start to find your greatest entry points on the bearish perspective, the bearish side. So you see a sell-off away from that 50-period moving average, then bounce back up to it, and then a sell-off away from it, and so forth and so on. And the stronger the bear market becomes, the more it'll start to behave that way. So it'll start to give you those sell signals at that 50-period moving average as it pushes away from it and keeps going, keeps going. And so that's something I would look at and say this confirms the bearish downtrend. It doesn't confirm a bullish. It definitely doesn't confirm a bullish move in the Dow Industrial Average, and also it does confirm the bearish move of the 50-period moving average right here, trading below the 200-period moving average. So it confirms a bearish trend between the two charts. So that's something that I'd be looking for, which would tell me don't try to buy the dips and look for a bounce to the upside. You want to go the other way. You want to wait for the rallies and say, where is my sell opportunity when the ultimate oscillator or your slow stotch or whatever oscillator you're using gets up there above that 80 line. That's when you start looking for your sell opportunities. Like 3 days ago we had that sell signal, confirmation the next day, so that would be a sell opportunity in my opinion. Quick glance now at the long-term Dow Jones Industrial Average chart here. We're looking at a 20-year chart. Each one of these candlesticks represent 1 month of trading activity. So though we see this candlestick formation right here, it's not finished being formed until the end of February, right? So keep an eye on that. The main thing here is just to point out a couple of details. Again, this is a 20-year chart. A lot of time on here. Basically, you're looking at whenever the slow, on this particular case, it's the oscillator that I'm using here, the slow stotch comes down and hits that 50 line, starts moving below it. That's the start of that sell when you start to get that bearish market going on, right? And it continues on until you find a bottom, right? That happens here. So, and this how long it took this time, all right? And it took it a long time of just churning up and down, back and forth. Next time around, you got a different position. You got the again below the 50 point on the oscillator, but it falls much faster here. It comes down and messes around with that 50 period moving average, and then once you get a close below it, that's it. Once you close below the 50 period moving average, that's it. You start to find resistance at that. It'll no longer act as support. It'll act as resistance. Like you happened here, you had support, and you close below it. Now you act as resistance, okay? So the same thing's going on here. You're acting like a little bit of support here, but you've already got other indexes that are falling below it, which tells me that this is going to follow as well, and it's going to close below it. Once you've got that, you're going to start finding resistance at the 50, not support, and it will then run away from that 50. Also notice that the candlestick formations become larger when they start to move away from it, because your next line of support is at that 200 area, right? 200 period moving average. So in this particular chart, we look at this thing started a while back here, okay, and it's rolled over. We got lower series of highs, right, and lower series of lows. Okay, we're already rolling over, doing this little activity that we've seen on any of your global charts. Will be looking like this right now. Okay, let's clean that up right quick. All right, so now what I'm looking at this chart saying, all right, where can we go next? What's our next area of support? And I would look at that being that 200 period moving average right about here. Of course, it's still moving over time as we start moving lower. So we're looking at about 12,000. Okay, that's a long ways from where we're at right now. That'll also put you in line with the previous resistance point here and here. Will now be acting as support, right? Which is about the same area. So that's where you would look for the first level of support to come into play. So I would look for a move down here. Doesn't mean it has to stop there, but that's where I would look for my first target. If we break that, the next obvious target is going to be 7,000. Okay, that's going to be where we've tested it multiple times in the past. Here, multiple times, and then here as well. And that's where I would look for it again. So you've got a lot of potential downside here that could come into play. I would give the bearish argument a lot of credence here. We've got a lot of different balls up in the air. Any of those could come down and hit us in the head. So until your market shows some kind of a strong bullish condition, I see no reason in getting long in this market. Quick glance right here at the NASDAQ. Again, it's the same 20-year. Each one of the accounts that represent 1 month of trading activity. You can see that we have tested previous high, okay, and we have rolled over and got lower lows, and we have lower highs, and we're moving toward that 50 period moving average. This is not an area where I would be a buyer at this point in time. Again, keep in mind that once you close below that 50 period moving average, the next move is the 200 period moving average. So that's something that you would look for. Again, lots of downside potential still here to be cautious for sure. Enjoy your weekend, and I will see you all again in the next one.